So welcome to the Mortgage MythBusters today with Debbie Cowan and Lori Meany with
Hi.
Prime Lending. We've kind of talked a little bit about this before, about 20% down is needed. Keep in mind we have a program that has down payment assistance for people with scores as low as 600. So that's a 100% loan along with that down payment assistance program. Some of it's forgivable, some of it's not. It depends on the program you choose that's right for you.
So you don't have to have 20% down. And even if you don't need down payment assistance, I mean, we have programs with 5% down for conventional. We have all different types of down payment qualifications. The old adage, I think you said it one time in a video where grandma said you had to save 20%.
Yes.
You don't have to do
not.
that. We have so many options for you for down payment. And one of the myths that I always hear is, do I need to get a hard pull on my credit if I need a pre-approval? So no. You don't have to have a hard pull at the time of pre-approval. We can do a soft pull. It doesn't affect your credit report. It doesn't affect your credit score. However, we will need a hard pull, right, when you go into contract. So we will eventually be pulling it.
And keep in mind, don't do anything to mess that score up between when we do that soft pull and that hard pull.
Yeah.
Because that has happened.
Yeah, and we're only looking at one bureau. There is some risk by doing a soft pull, but to kind of get a guideline and kind of get an idea of what your circumstances look like, we can certainly do a soft pull.
So pre-qualification versus a pre-approval. Are pre-qualifications the same? No, they are not. You have to get a pre-approval, right?
Yeah.
I mean, pre-approval is when we look at the actual pay stubs, we look at the tax returns if that's needed, to make sure that you can start that deal and actually finish it and close and move in.
What's the worst thing that an agent would tell you that they hate to get is a bogus pre-approval?
Right.
Right, and there's so many lenders out there that will do a quick call, on somebody,
Absolutely.
give a pre-approval, then they go into contract, then they come in with their documentation, and it's nothing like they said it was, right?
Hence, we get a call on trying to save the deal.
And then it's like, so, there is a difference between the pre-qual and the pre-approval, because a pre-qual is just that. It's a verbal, no information really, just your date of birth, social, and your income. Pre-approval means we can pretty much take it to the bank because you're going to close, because we're going to verify your assets and income.
Absolutely. And Debbie, can you get a loan if you have student loans? That's another one of the myths, that you can't get a loan if you have a student loan.
Well, you can get a student loan. You can definitely get any type of product loan, right? We can do FHA, we can do conventional. There are even some cool things, like if you're in a deferment, we know eventually you're going to have that student loan debt. Maybe they'll wipe it and forgive it, but for now, all the investors are going to say you're going to owe this money for student loan debt at some point in time. So some programs are going to require that we take 1% of your balance. So if you have a $100,000 accumulative student loans, that's what, $1,000?
Right.
Is that right? I have to do my math.
Yep.
So that's $1,000 payment we have to kind of assess to you to ask. Some of them only require us to count 0.5% of your student loan debt, which would be $500. We're going to look at those two options and decide whether or not it's good to go this way or that way, because we have options, and that's the most important part of it, is knowing we have them. But yes, you can get them. Hopefully you don't have $300,000 worth of student loans and you only make $60,000 a year, because then I will spank you, because I have seen that as well, where if I'm telling people the amount of money you have in student loan debt, you better be making in your income. Just saying.
It's true. That is true. Another one of the myths out there is that you cannot get a home loan if you are self-employed, or that you have to go to your bank to get it. Not the gist of it. So we offer so many other programs that these banks do not offer. We have bank statement programs. We have the DSCR, which is kind of like an investor type program if you're wanting to get into investment homes. So if we can't actually qualify based on those tax returns, we have alternatives. We even have a stated income, no job type loans. So
so any of you out there that have been told no because you're self-employed, call Lori. She's the expert in self-employed loans, and I want her to get every one of them. And no, I'm teasing, but really that is, in my old days of being in this business, I used to say, our motto was we like to say yes when the banks say no, and that's who we are. I mean, that's the reason why we have almost 400 products.
And that doesn't just go for self-employment,
No.
right? That goes for a lot of different types of loans that the banks sometimes cannot do. Some banks can't even do the USDA loan, and we do that.
Right, or that
spaceship mortgage.
They don't do manufactured homes. People don't know that. They do a pre-approval, get them pre-approved.
Absolutely.
So there are a lot of different, reasons to ask lots of questions during that pre-approval process.
I agree. Can getting pre-approved hurt your credit? Everybody thinks that, you're getting mortgage pulls, it's going to automatically just drop your score, and it does not, unless you're shopping with 10 different lenders, which honestly you should not.
And if you are, don't let them pull your credit, because we can tell you what your score is. And if you want to really shop, then let someone who's reputable tell you what your mid score is, because it's going to be the same with everyone else. And no, isn't there a window that you have, like 10 days to have your mortgage?
They state 30 days.
But I think it's less.
Yeah, and sometimes I've noticed too, if it's a mortgage company, a lender, a bank, kind of depending how they're registered, will depend if it's a hit or not.
I think that the other thing that I see about the credit, issues is that everybody thinks that what they're seeing on Credit Karma, they're pulling up their own off their credit card statements,
right.
Whatever. Y'all need to understand that your credit score for a mortgage inquiry has different risk factors put into that. And so your score most likely 99.9% of the time is never going to match what you see on your Chase credit card statement. And that's always a big thing. It's always like, why is my score so different? Well, it's a big risk. I mean, there are a higher risk for a mortgage because you're borrowing a lot more money, right? So they throw in those risk factors for a reason, because we want to make sure that you are a good risk when we're doing these.
Yeah, it's a little bit stricter scoring system.
Yeah. Does it hurt your credit?
The gist of it is no, not unless you've had it pulled a million times.
Yes. Don't let a car dealer do it either while we're talking about it, because that does kill you. When you walk into a car dealer, please go in there with a pre-approval from your bank or something else. Already shop your rates before you go into a car dealership, because they will multi-send your application out to
10, 11 hits.
And you'll get 10 or 11 hits, to Lori's point, and you've got these inquiries on there for a year.
Better yet, though, don't buy that car until you buy your home.
Yeah, and that's a better option.
Because we have to hit it in your debt ratios.
Yes. Yep, I like that too.
A lot of people also think it's cheaper to rent than to buy.
What do you think?
I ran a lot of mortgages that are lower than the rents that they're paying, and they get equity in their homes. So.
I mean, they're buying something that's theirs, right? So sometimes your payment can be a little higher, but if you pay attention to what your principal and interest payment portion of that payment before taxes and insurance is typically lower than your rent, and you own it. So there's that. I mean, that's the most important thing. I kind of wanted to say, one thing I hear all the time is the lowest rate. I mean, is that the best deal that you've got, Debbie? Is that the lowest rate you can do? Our clients have one question to ask. That's the only thing they know about mortgages. And what is it? What is your interest rate?
Right.
And they think that 1/8% may be different. And we're always going to be very competitive, and we're always going to be competitive with the market. So we're not a company that's out there trying to, gouge people in interest rates. So the market right now, the margins and how we price loans are pretty much the same as everybody. But if somebody is undercutting you or me in this business, in our market today, it's usually one reason, and it's usually because they are a call center, and they are not local, and they are order takers, and they are paying people to sit there and take your information, which you'll never speak to them again. So is that 1/8% better to know that you can walk in an office and sit with Lori face
It's
to
lunch
face?
once a month, typically.
At the same time, what do you get for that 1/8?
Right.
I mean, you get local lender. If Lori tells you something, because I'm using her in this case, but if she tells you something that you don't like, you can come in and see her.
Exactly. Come sit down
you
in
can
front
find
of
her.
me.
You can find her.
Plus, I answer my phone,
And you
answer your phone, and it's 5 o'clock, and they all of a sudden have a question at 6:30 or 7.
Because that's when they got off
They can
work.
still reach us,
Yeah.
and that makes a huge difference when you have that customer service at your fingertips all the time.
Yep. We are there for you 24/7. Lori, let me ask you a question.
Yeah.
I hear this all the time. I can't buy a house because I had a foreclosure.
Now, if it just happened yesterday, then there'd be a little bit of a problem. But, 2 to 4 years out on a bankruptcy or a foreclosure, you can still typically get a home.
And we have broker products now that you
That are
can
less
be
than
one
that.
day out of bankruptcy,
Yeah.
and not that it's going to be, cheap, and not that it's going to
Right.
be low down payment. But yeah, we have options. And because and the one thing I will talk if you don't mind, because
No,
I'm
go
taking
ahead.
over again. But the one thing I will always say about someone that has a bankruptcy, and I saw this just recently on a credit, they had filed a bankruptcy 5 years ago, Chapter 7, which releases you of all credit, all debt, and then they started getting new credit, which is a good thing because we want you to reestablish your debt and your credit. We want you to have new credit. And usually within about 2 years from that bankruptcy, people are starting to extend credit again. The challenge is that person went delinquent on their credit after their bankruptcy. And so as a lender, we're going to be looking at that bankruptcy or that foreclosure as a one-time event. It was a life event. Something happened in your life that created that issue, and it was a one-off situation. If you file bankruptcy and you start opening up credit again and you go delinquent, it is like you have zero financial responsibility.
Exactly.
And you are considered not just a high risk, but a no risk.
So you want to stay squeaky clean.
Yeah.
Very squeaky
and learn
clean. Set up automatic payments.
But learn from your mistakes or learn from the life issue. Not even a mistake. Maybe you had a health issue or something.
Right.
But learn remember how difficult it was for you to have to own up and go to the bankruptcy process or the foreclosure process. You don't want to go there again, and we don't want to put you in that spot again. So keep in mind, if you've had bankruptcy within the last 7 years and you've had recent derogatory credit, especially recent within the last 12 months, you're putting yourself in a bad situation for getting any financing from the mortgage side.
Absolutely. A little bit back to when you were talking about, the rates and if somebody undercuts it by an eighth or things of that nature. The lowest rate isn't always the best deal, kind of what you were saying. But the thing that they need to look at too is all those fund fees. Just like our VA. It's amazing, right? No processing, no underwriting, no 1% origination fee.
Right.
$400,000 house, that's $4,000 they're dumping before they know it.
Right.
But they're getting maybe 0.25% better.
Is it worth it?
It might cost them $2,000 to buy down the rate to get the same rate with us. So they would save in the end.
Can I relate that the same thing to the last podcast we did about the listing agents with seller concessions and things like that? If someone's financing, maybe for a cash deal, if the seller wants to drop $15,000 from the purchase price, maybe a cash deal that would work, right?
Right.
But for someone that's financing, the difference in that payment of $15,000 reduction is probably $70 a month, $50 a month, depending on the purchase price, as opposed to walking away with $15,000. So is that always the case? And lastly, is it always smart to pay cash?
Right.
So we're going to have a big to-do about whether or not we want to be a great advocate and have a great resource team for our agents and our clients to have the knowledge, because it's not always best to pay cash, even though you think it might be, because you don't want a mortgage payment.
Right.
You'd be surprised. There's going to be enough information. We're excited that we're going to be doing a presentation with a financial planner that's going to really explain the do's and don'ts of should you take that money and not have a mortgage, or should you reinvest, or whatever the case may be. But yeah, there's definitely myths. Cash is not always better.
No, definitely not. We talked a little bit about if you should pay off all debt before applying. The answer is no, you don't. You definitely don't want to close credit cards like we mentioned before, but you want to keep those low balances. And if you do have a car and you're almost paid off, don't pay it off yet, because if you pay it off, your score is going to drop before it gets better. So keep that payment, because we can exclude it or pay it off at closing and you still have the great score.
Yep.
So there's all those fun things that you can do.
Well, and I love the fact that you said, definitely don't pay off the car. Don't go out and buy a new car because it's almost paid off. But definitely don't worry so much about, a lot of people don't realize, we can pay off things at closing too, where it's not going to affect the score.
Absolutely.
So we may have a debt ratio situation where we're going to go, you know what, you have the funds, maybe you're going to put 30% down, but maybe we should do 20%, and you take that 10% and pay off this car payment that you have that's $600. That's going to save you, it's only increasing your mortgage payment by $100. So now you've saved $500. So we're going to work out total analysis of what's going to be your best bet, and you may have to do that anyway just to qualify, but there are options, even if you have high debt, that we might be able to still get you taken care of at closing, not before.
Definitely agreed. Gift funds for down payment. People think that if they don't use their own funds, or that it's not seasoned for that 60 days, that they can't utilize the money or close. But if you're getting a gift from a parent or that grandma or, a relative, then typically you're fine. You
Yep.
can use those gift funds, whether it is paying down debt because
Yep.
it's needed.
And I want to kind of go back to, can you use a cosigner for a loan too? Because I've seen a lot of situations with first-time buyers
Yes.
recently because of the affordability issues. Maybe they don't fall into this category or whatever. We have great grant programs that allow a non-applicant co-borrower to be on the loan. And again, it's just asking the right questions because nobody else asked those questions. And both applicants were turned down with a different lender. Both of them have co-signers and we're in process. So just asking, can you still qualify for down payment assistance with a co-signer? Yes, you can.
And then you save the day.
And then you save the day. So, there's a lot of myths out there in our business. And the last thing I think really should just say again is no matter who told you, no matter who asked you, if it doesn't sound right, give us a call. Let us answer it for you. And every circumstance is not the same. So we're going to look at everything. But don't fall into trap of hearing that Joe Blow down the street got this, couldn't do that, or couldn't do that. Because it could have been just the lender they were using or the experience, not to talk bad about any company. But again, I'll go back to experience matters, and we're gonna dig.
And everybody starts somewhere.
Yeah.
They might have only been in the business for 6 months.
Yeah.
We were there once.
Yep.
We learned from our mistakes, and now
Trial
we're
and
extremely
error.
knowledgeable.
Yeah.
So things happen, but experience definitely matters.
Yes. All right. So thanks again for joining us, and we'll see you next time.
Bye.